Should you be freaking out as the market is pulling on back? What's going on, guys? It's Ricky, and what a day. So in today's earlier video, I talked about the NASDAQ market and I looked at QQQ, right? I talked about, hey, although the market looks a little bullish, let's not be surprised or get ahead of ourselves because we're still trading below the 4-hour EMA. I'm not going to be here to point the finger and say, haha, I told you so. I can't predict the future. Just as right as I am right now, I knew that, just like I explained in my earlier video, that the market did have the possibility of breaking above that EMA and actually indicating signs of a reversal. That is why I called it a critical point. It's not about being right. It's about proceeding with caution at critical levels. And that's what I want to make sure is something you understand. Now the market has gotten rejected by that EMA. We've pulled on back since that earlier video, and we made a few bucks, right? As the market sold off, we talked about it. There's always money to be made as long as we focus on two things, and that is market direction and where the progress is being made. If there's progress on the downside, then guess what? I can jump into SQQQ and make money as the market goes down. Or if the market begins to go up, then I can go long and I can jump into TQQQ, vice versa, right? Very, very simple, very, very straightforward. Now, what is something that not enough people are talking about? So I don't want to get ahead of myself. I want to first show you the kind of the good news. NASDAQ futures are in the green. This happened yesterday or the day after markets sold off. Right after the market closes and after market hours closes, markets begin to bounce back. There's a slight resistance right around 18,000 for NASDAQ. It's kind of just consolidating here. We'll see if we actually break above, and we'll see if the market opens up in the green. So market looks like it's trying to hold its support. This is the big picture, right? I'm not looking at the 1 minute. I'm not looking at the 5 minute. I'm trying to look at the overall big picture. Based off of recent patterns, yeah, we might have a little bit more selling pressure to lows of 420. That might have been an overreaction based off of the news and the fear of what was going on in Japan and how bad things could actually be. I don't know if we're going to get there, but nonetheless, I am paying attention to see if we see more progress on the downside. That is what I'm paying attention to. That being said, when we look at this on the 4-hour, we can see the overall big picture. We are pretty oversold, but can things actually get worse? Yes. Now, let me be very straightforward with you. On the day chart, we have not traded below the moving average in all of 2024. Does that sound kind of crazy? I want you to be aware. There's no reason to not talk about this. I want you to be aware. We, as the NASDAQ market, have not traded below the moving average, and this is the 200 moving average on the day chart. We have not traded below the moving average in all of 2024. The last time that we were trading below this was early 2023. It's been nearly 2 years. So this pullback has been a little bit more significant. I'm not here to sugarcoat it. I'm here to tell you straight up, right? Can things get worse? Pay attention to this. If we break below that moving average, which right now it's right around 428 for QQQ. If we break below that moving average and we begin to show signs of progress on the downside, we have a lot to sell off, right? And the thing that I want to point out is the magic number that the market always focuses on. What is something that Japan announced that it entered? A bear market. Do you guys know what a bear market is? A bear market is considered a 20% drop from previous all-time highs. So as the market makes new highs, well, what would a 20% drop look like? And where are we right now? I'm just expressing to you. I'm not saying that the market has to drop. For all you spammers that are like, oh, you're fear-mongering, I'm making you aware of both sides. I know that the market could find its support here and could begin to recover. We'll see. But just as much as it could recover, what happens if the market does drop below that moving average? Well, based off of previous highs, which is right around 503, let me go ahead and point it right there. We are currently down 13%, 13.7%. We are more than halfway into a bear market. Let's be very straightforward. When would a bear market be triggered? A 20% drop from previous all-time highs. That's going to be right around 402 if I'm not mistaken, 402.50. That would be a 20% drop from previous all-time high. And this is not from an individual stock. This is QQQ, which is for the NASDAQ overall market, which means that the stocks that make up NASDAQ probably experience a larger or more significant drop. Because if we look at something like NVIDIA has experienced much more than a 20% drop. So if we look at previous all-time highs and the current lows that we are currently at, that's been a 29% drop. So yeah, markets are oversold, but let's not pretend like things can't get worse before they get better. And the reason I'm talking about this is you need to be aware of these critical levels. Right now on the day chart, we are testing the moving average as a support. This made for a really good buy back in late 2023 when markets pulled on back. They found their support and then recovered and went back to being bullish. We will see if that is the same opportunity that presents itself. But if we break below this moving average and we begin to see progress on the downside, then get ready for some selling pressure, because that is when fear is most likely going to get really injected into the market and we will see the market sentiment really begin to change. This is where, again, you will begin to hear news and concerns about a recession, a bear market. We're in bear market territory. And when more fear gets instilled, more volatility begins to present itself and more selling pressure follows. It's not the end of the world. It's a very simple question. Can you tolerate the time that it will take for the markets to recover? So as markets, and if markets do begin to pull on back, do not buy the dip on anything that can continue to sell off that you cannot tolerate. Always think about worst case scenario. And if you can't tolerate it, then don't buy it early. Very simple. I wanted to say this and I wanted to express this in advance. Hopefully, again, we'll see in the next few days. If we do find a support and begin to recover, then we can go long. If markets do continue to sell off, then we can choose to go short. I'm very excited to keep you guys all up to date. All I ask you to do is drop a thumbs up and subscribe. I hope that you guys could see that I'm trying to be very straightforward with you guys and always talk about both sides, but I want it to be very, very clear. Right? This is an amazing time to be paying attention to the market and what influences it. You don't have to agree. You don't have to trade with the market based off of current conditions. They are more volatile, which comes at a greater form of risk. But for those that can tolerate it, it can present great opportunities. I'm very excited for tomorrow's live trading session. I hope to see some of you guys there. And if you want to watch me trade live as soon as tomorrow, that's going to be that second link in the description down below. And I'll see you tomorrow at Market Open for our live session. Take care, team.